All right, so we're going to look at the stock market analysis here as we look at the intermediate analysis for the S&P 500 and the Nasdaq. Markets, of course, have been exceptionally strong, and we want to look at what the conditions are of the market, talk a little bit about our analytical style, and how you can, going forward, apply the information that you get from us to your own style of trading. So key aspect of what we bring is the ability for you to do that. Here is the S&P 500 looking at the SPX, and this has our cycle analysis on there. Just for your understanding, there are three major components to our analysis. One of them is cycle analysis, which is looking at the rhythms in the market. On the bottom here is a drawing tool called a cycle bracket. And what this it helps us is the average length of cycles. And the big one is the dominant cycle, the smaller one is a minor cycle, and together they make what is a harmonic family, just like music. And you can see the rhythm in the market of money flow right in here. So that's the first component of our analysis. The second one is momentum conditions, where we look at two main momentum indicators that we have. The one that you see here on the weekly, and we use that in other charts also, is called the reversal scout. And this helps you understand the momentum and kind of scouts out changes in the market conditions. When you get a downward turn like this, and then it turns up as it did right here, it confirms the low right over there. Here, there was no downtick through that correction. You can see how strong the market was, and then just basically a little flattening out and an upward turn again. Here's where it turned down right over here, and the market went into a 1 month, very modest correction of only about 5.2%. And then the third part of the analysis is what we call swing high, swing low analysis, and that is where we use the information we have on the charts, important levels, and then look for the support and resistance levels and the extensions in here based on the movements in the market. So we project out levels that we think the market can move to. And then what we want to do is we want to establish market conditions, which we do, and we show you here. We go into much more detail in other aspects of our membership site. So what we have in here, as you can see, there's a minor cycle right in here, and it's been running about 11 weeks. That's this one, and this one, and this one. And then we had this low that occurred right there. Now I want you to note that where the momentum turned negative, the market was under some pressure. Now the momentum is neutral in here, or maybe a slight uptick. So this is not a real powerful upward move on momentum yet. That says that there may be some downward momentum still established out there in the market. We're not really sure. And what we do is extrapolate from the lows and highs that we have in here, where the fib extensions are and where we can project up. So we have a projection for this cycle that we're in right now. I'll just blow this up for you to see, of coming up to when you have a positive cycle, but it breaks the 78.6%. Only about 30% of the time will it get up past that high, and that's what it did. So it's an unusual condition that you see there, and this is where the projection would be, right up in these areas of about 45.75 to about 45.80, 45.93, and this would be a good place for it to stop if it wanted to. And then these areas up here, if it really got a lot stronger, which is 46.62 up to about 4700 right there. And there is, based on the amount of weeks that you normally get a rally, there's probably another month of upward tick in there, and that potential upward ticks until you get into what is that next period of risk right in here. So again, if you look at those yellow zones that you can see right here, those are what we call corrective or declining phases. As you go back here, and you can see how each of those align. And when you get into the periods where those two cycles do come down together, those are called nesting areas, and that's where you can get the biggest drops. But when you have a market that has such a strong upward force going on that doesn't let these corrections come very far. And what you're looking at since this pandemic low is really historic. The size of this move, the amount of upward momentum that's in there, and this break below the 78.6% right there is an indication that this long period of upward momentum is losing some force, and that could be the beginning, and that's why this period of risk in here could be bigger right there. So the present conditions for the stock market that we have right over here for you to see as of today are that, well, the phase in the market is rising. The momentum conditions may be slightly positive. The reevaluation level from this upward move is right here at 43.34. If it got below there, the market would be likely in a lot of trouble. But right now, that's a long way down before it shows that kind of downside risk. And the sum of the evidence is an intermediate condition that is bullish. So that's what we're looking at right in here. Now let's switch over to the Nasdaq, which has a little bit different picture in here. And you can see in the Nasdaq we have, by the way, these cycles right in here again are aligned very closely to the S&P 500. And let's just look right now where we are in the Nasdaq, and we have, well, a similar condition. We could see the rally going right here, but it tried to get through that reevaluation level and was not able to. So that is, a sign of something there. In addition, momentum, which turned negative right over here and brought this correction, is still negative. So that says to us that the conditions in the Nasdaq are weaker than the conditions in the S&P 500. So while we've gotten a pretty good rebound here in the Nasdaq, as you can see with the stock market, it's just not in as good a shape as we see in the S&P 500. If it does close through 15,430, that would be a good sign. And it tried to do that this week, as you could see, but not able to. And then this period out over here, November, December, is a period of risk, as we showed you in the S&P 500. I just don't have those yellow ovals here on this chart. So the present conditions here that we see in the Nasdaq are different slightly than what we had in the S&P 500. The present conditions have the cycle phase as rising, the momentum as negative, which is weaker and suggests that as it fails in this reevaluation level, that it could give you some downside in here, where the S&P 500 likely would give you less downside. And the sum of the evidence is intermediate, I spelled that incorrectly, neutral. And the reason it's neutral is because you have negative momentum in conflict with a rising condition here in this cycle, where our other information that we look at in other charts to show us that the negative momentum and the cycle patterns then turn negative, then the sum of the evidence would be negative. But right now it's neutral. That's why this is gray in the S&P 500 right over here. I'll go back to that chart. I put that up in green so that you could see in there that it's actually a bullish overall condition in the sum of the evidence. So that is a look at the S&P 500 and at the Nasdaq. So, how do you apply this information to your own style of trading? Well, there's tons of information that we have on the markets that we bring you. We have our stock index report, that's SIR Daily Snapshot, which has a ton of information on short-term, intraday stuff, the longer term. It's just filled with the information you need to be able to apply this intermediate analysis I just brought you to your own style. Also, you can, if you're a shorter term trader, you can use the SIR live chart stream on the 15-minute chart. We also offer that in our special that I'm going to show you in a second, in using all of our proprietary indicators on all different time frames. Or you can watch Future Speak, where I look at detailed weekly and daily analysis in these indexes and a total of 26 other futures contracts. All that could be available to you right now at the huge cost of nothing. we're offering a preview, a look at our preview services, and you'll be able to get all of that. The daily snapshot, the SAR intraday live chart stream, the multi-time frame chart stream on the S&P 500. You don't need any special platforms. We broadcast this through our platform. You'll get daily trade ideas. You'll get Future Speak, the Slimulator momentum tracker, for longer term, the Slimulator ranking system for the 84 best traded symbols. All of that, 7 days, so you can preview, figure out how to use what we offer on your own style of trading for nothing at all, no cost at all. No credit card needed. Just sign up at askSlim.com. Go to the middle of the page at AskSlim and click on Claim Your Free 7-Day Trial. And that will get you in for 7 days, and you'll be able to get a great look at all of this stuff and how to get a good sense for how to apply it to your own style of trading.